when I do market analysis for a potential trade, most of the times I can make a case for a trade to go in both directions, profit or loss. While I understand that any trade can result in either ways, however, when I actually take a trade, quite often they end up in loss. And when I don't take a trade, most of the times it turns out to be profitable. How can I avoid to be in this kind of situation? The problem is you are clearly trying to predict the direction of the market. You believe that if I can predict whether the market is going to go up or go down tomorrow, I can then buy and make money, or I can then sell and make money. And you are trying to find out this. Since no one in this world knows what is going to happen tomorrow, when the market was here, there were obviously three possibilities: up, down, sideways. Any of these three are equally likely. There is simply no way to predict which one of this is going to play out tomorrow. No matter how good you understand the market, no matter how many cool tricks you know, you simply cannot predict. I never try to predict what will happen tomorrow in the markets. But yes, you can calculate the risk that is involved in these three kinds of market developments. What is the risk of market going higher against going lower against going sideways? This question you can answer by looking at the structure. Now, when we look at this structure, what do I see? I'll show you what I see. I see that the value is continuously developing higher. Now, if the value is continuously developing higher, the directional bias is up, and you need to find out a way to capitalize on this. Okay, directional bias is up. Now comes the question, what time frame you are trading from? Are you going to hold your trade for 1 day, 1 week? What are you going to do? Do you already have a position in place which is doing good, which is doing bad? All these questions you need to ask. Now, if you are an intraday trader and you come to this market and you see the directional bias is up, then you start asking questions. Okay, if the directional bias is up and market has opened higher and in initial balance itself it has come down, what does it tell me about the current market? How good a job it is doing? If the directional bias is up, and that is clearly up because value is shifting higher, is the current market doing a good job of keeping or maintaining this directional bias? It is not. Even though it started out with some potential higher value area, it is doing a poor job. Range extension, this and that, all were happening to the downside, and you left behind an anomaly that is even more confusing. So if it is not doing a good job on intraday basis, what do? You look to find an opportunity to short this market. Why? Because even though the directional bias is up, in the short term it is not doing a good job. So the risk of being long has increased dramatically, at least in the short term. Okay, in the short term for intraday. So you try to look for a short trade. But when you look for a short trade, you also see, okay, anomaly is left behind. So if I get an intraday movement down, I will be getting out of my position. I won't be carrying it over because the directional bias is still up. And now it is so clear that you have a double distribution trend day down with a nice strong tail at the bottom. You cannot, the risk of being short is very, very high in this market. I would never carry this forward tomorrow. Does it mean that market is going to go higher from tomorrow? I don't know that. All I know is I cannot take this risk. So I am not going into the close with a short position. And since my time frame is very clear, my objective is very clear, I have no business staying in the trade on Friday, or even unless market develops a little bit on Monday, I do not have to take a decision. That is how I set up my life. And you also do not have to do that. Who told you that you have to take a market decision every day? You do not have to do that. Because market does not give you clear indications every day. Most of the time it will keep you confused, and at rare moments it will give you clarity. So you have to capture that clarity when market gives you. Right now it is giving me good clarity that staying short is risky. Stay out of it. If at all market wants to go down, what it will do tomorrow, instead of going up, going into tomorrow's higher distribution, it will start developing a lower value area. It will start trading in this tail. Then I will know, okay, market is doing a very poor job of going higher. In fact, whatever signs of strength were there in the markets, now it is negating that. So despite this anomaly, I will then say that, okay, maybe market will go lower and explore lower prices. And then I will go and try to find out where the last points of demand are. If they take out the last point of demand, then I can be sure that, okay, yeah, market may go down. The trend may be reversed in the short term. This is how I will trade. Simple.